Okay, so today we will be discussing the book How Money Works for Women. How Money Works for Women. Hopefully, you guys can see that. How Money Works for Women. Yolanda, you want to put your book up just to make sure everybody can see it? I know you're in Japan, but How Money Works for Women. All right, and Take Control or Lose It by Sharon Lechter and Kim Scouller. All right, so um, first we're going to just welcome Kim. We're so happy to have you join us today. Welcome, welcome, welcome.
Thank you. It's
And
great
I'm going
to
to have
be
you
here.
give a brief, yes, we're glad to have you here as well. I'm just going to let everybody know that I decided to do this book. Our company wrote this book called Wealth Wave. And I chose this book for April because some of us may not all know, but majority of people supposedly know that National Financial Literacy Month is in April. So I felt that we should talk about finance and talk about money. And since the company I'm with, they wrote a book, and I said, what better way and what month is better to talk about this and have a discussion is in April. Um, Financial Literacy Month is a time to highlight the crucial role of financial education in empowering all Americans to achieve financial well-being and take control of their financial lives. So we have the expert Kim Scouller here, who also works with my company Wealth Wave, and I wanted her to, come on here, talk about the book, and we're just going to have a conversation. And all of us women can definitely benefit from this. So, Kim, please give us a quick introduction of who you are, so everybody can know who you are.
Sure. Well, thank you so much for having me on. It's, you know, doing the book has been kind of a love project, a passion project for me, because I've seen this real absence of, practical financial information out there for women. So a little bit about my background and how I got to this point. I am by training, by education, a lawyer, and I've been a lawyer for more than 30 years. A lot of that time I spent as in-house counsel for the Transamerica companies based in the United States. I did a lot of mergers and acquisitions work for them and ended up assisting them in acquiring companies in the city of Atlanta, Georgia, which is where I am calling in from, zooming in from now. At the end of that acquisition, Transamerica asked me to serve as president of the broker-dealer, which is the entity that gives you the ability to sell stocks and bonds and other kinds of investment products. I took over that role, and we quickly became one of the largest broker-dealers in the United States. I ended up traveling all around the country and throughout Asia, talking to people about finances. And at the end of my presentations, I would be surrounded by women because they had really not had an opportunity to see a woman leader in financial services. And it really spoke to me about the responsibility for women leaders in any industry to really be that presence and that voice for women. I ended up leaving the corporate side because for those of you who are moms, you know that it's really hard to balance a job that's 24/7 with raising your child or your children. I have one son. And so I ended up leaving the corporate side to spend more time with my son. I started my own financial business and my own law firm. And I continue the work that I do through Wealth Wave, helping people understand how money works, especially women, and helping people, identify their goals and then put the things in the steps in place in order to accomplish those goals. For me, helping women has always been a big part of my financial journey. I'm a single mom, and I've lived through just about everything, the good, the bad, and the ugly. And so single moms and moms in particular just really have a special place in my heart. when I approached Sharon about doing the book with me, she was completely on board from the start because helping women with practical information is, I mean, also something she feels very passionate about. Now, a little bit about Sharon, my co-author. She co-wrote Rich Dad, Poor Dad, and wrote several of other Rich Dad books. She served as the president of the Rich Dad Company for 10 years before leaving there to collaborate with the Napoleon Hill Foundation, where she wrote Think and Grow Rich for Women, Outwitting the Devil, 3 Feet from Gold, just to name a few of her New York Times bestselling books. She advised 2 US presidents on financial literacy matters, worked with Congress, and now works with state legislatures to make sure that our children get the personal financial information they need in order to live a life of prosperity. And so it was a great honor and privilege to work with her on the book and to become a friend of hers. And that's kind of where we are now. Sharon and I travel around the country talking about talking to men and women, but for me, mostly women, about money.
Thank you for that introduction. Okay, so I wanted to start off saying that we already have a How Money Works book, the original book. So, like, what gave you the idea to write a book about how money works for specifically women? You know, I wanted to
Well,
know that.
that is a really great question. The original book does a great job about talking about the basic financial concepts and going through the 7 money milestones, which are the components of a solid financial plan. Now, we know that money doesn't care if you're a man or a woman, but women experience money differently, especially because we are the caregivers, we are the educators. We, take on so much of the family responsibility, which impacts us from a career standpoint, the ability to make money, from a business standpoint, and also from, an ability to earn and grow money, because there are all of these negative messages out there for women that, we're not good enough, smart enough, educated enough, we're not enough to really understand about money or put money to work for us. And so I wanted to write a book that told the story of women. And so in the book, we've got 9 different characters, different stages in their life. They're going through different things in their family, in their career. A lot of the stories have to do with caregiving. Because women are caregivers, we are more likely to end up in poverty because we will sacrifice our money to take care of our family. And so for Sharon and I, we wanted to celebrate women who want to be caregivers. I'm a caregiver in my family. I think it's a superpower that women have, that we are caregivers. And we wanted to give women the information and the tools so we don't have to sacrifice our finances to take care of our family.
Okay, did anybody have any questions? Anybody? Okay, so I know you was a lawyer. You stated that you was a lawyer for 30 years. So I want you to talk a little more about how did you transition from being an employee to an entrepreneur?
Wow. That was interesting, and it was hard. It was the toughest thing I think I've ever done, but it's also been the most fulfilling thing that I've ever done. I loved working for Transamerica. I loved being part of the company. Transamerica has some of the smartest people working with them, and I learned so much from that experience. But as an employee, I had zero control over my time. Even as president of the company, I found I had less control over my time the higher I got in the company hierarchy. And so when I left the corporate side and went over to owning my own business, I really kind of struggled with the mindset, trying to get the mindset around you know, being accountable to myself, not being accountable to a board of directors or, to a supervisor, being accountable to myself. I found I actually worked harder because I did all of this for my son. So I would, you know, take him to school in the morning, work in my business, go pick him up at 2:30, bring him to work with me. He'd do his homework. I'd finish my day. We'd have dinner. We'd spend time together. We'd do his homework. And then he'd go to bed. And then I'd go back to work from home, creating documents on the law side of my business or putting together financial plans for my financial clients. I mean, one of the big things that you learn as a business owner is you're accountable to yourself for your time and what you accomplish, your goals. It's all about what you want and what you're creating. But you've got to go out there and find your customers, your clients. And so I would do a lot of networking events. I would either create an event or I'd be part of an event. We women are such great networkers. I didn't I didn't really appreciate that until I was a business owner and collaborating with other business owners. That to me was a saving grace. Really learning from other women business owners, working with them, learning from men business owners. So many business owners, men and women, are really open and willing and generous to share their knowledge, their experience with you. And so that to me really saved me from making a lot of mistakes that business owners make as they're beginning. So I had a bit of a leg up in that. But it was tough. But I have to say, because of that, I've created the life that I want for myself. I am 64 this year. At a time when I should be downsizing, I'm upsizing. I bought a bigger house and I moved my whole family in. I moved my 86-year-old mom in, and my sister and her 18-year-old daughter already live with me. And then I moved my son and his wife in. They're saving for a house of their own and all of their pets. So we've got this crazy family, house full of people. We cook together, we watch movies together, we laugh together, we take care of each other together. And all of that is because I know how money works and because I own my own business, because I control my own time and I control my own goals. If I were still working on the corporate side, I'd probably still be traveling all around the world, having no control over my time and not have that ability to create this wonderful life with my family that I've been able to create.
Great, great. I wanted to share with people, normally when we bring up the topic about money, it's usually seen in a negative way. Can you explain a little more why that is?
So, and when you read the book, you'll see Sharon's introduction is all about where did you learn about money? We didn't learn about money in school. It wasn't taught in my school. And I talked to a lot of people, and it wasn't in their elementary school, middle school, or high school. It's only recently that it's become a required class. But for many of us, we learned about money from our parents or from our grandparents or whoever raised us. And it was all around these kind of negative messages or scarcity messages. In my family, my mom's favorite saying was, "Oh, we can't afford that." And I tell the story because a lot of people know this, either as a parent or as a child, going through the grocery store line where they have all the candy right there at child level. And I'd be like, "Mom, please, can I have this candy bar?" And she'd be like, "Oh, honey, we can't afford that." And in my head, I'm thinking, we can't afford a candy bar? What does that mean? What does it mean to be able to afford something? How much is enough? And it was this big mystery for me. A lot of people continue to feel like I don't have enough. I don't have enough because we grew up with these negative messages and this scarcity mindset. I think one of the big things that Sharon and I want to try and do with the book is through the journey of knowledge to move from that scarcity negative mindset to a positive mindset of abundance. That, we are coming into our own. We can have a better understanding of what is enough or what do we need to get enough to accomplish whatever it is we want to accomplish. And so, a lot of people think ignorance is bliss, but it's actually not. Knowledge is power. And we feel, power about money is kind of the ultimate power, because then you've got your future under your control.
Yes. I wanted to explain also just a little bit about what is the language of money. We didn't even know that there was a language to money, but
Right.
clearly we in this book that money has its own language. So I
It
wanted
does
you to talk
that.
about that.
Well, and what, I'll also say when women talk about money, because we think of money in terms of goals and what it can accomplish for our families, for ourselves. And it's interesting. I love men. Men are wonderful. Men are allies and supporters in what we do. But when men talk about money, it's different. It's about performance. It's almost like you're going to war to beat the other person. But, money for us is about a win-win. It's about accomplishing things. It's about creating a better life for yourself. Now, when you read the introduction chapter that Sharon wrote for the book, she goes through a lot of negative messages that we grew up with. And one of them, as I mentioned, was, I can't afford that, or we can't afford that. And Sharon encourages us to flip the script and ask instead, how can we afford that? And so rather than having these negative connotations about, I don't have enough, I can't afford that, I can't accomplish that, turn it around and say, how can I afford that? How much is enough? How can I accomplish that? To put the control inside of you. And if you have the control over what it is you want to accomplish, then we can break that down. We can show you the steps. Okay, if this is what you want to accomplish for you and your family, you want to buy a bigger house, you want to create a charity, you want to build schools in South America or go on a mission trip, you want to spend your whole time with your grandchildren, or you want to send your children to whatever college they want to go to. We can sit down with you and show you step by step what you need to do in order to accomplish that. But it's all about language and using the words. Create the words, create the language. Say the things, write the things down that you want to accomplish. Because it's only then that you can then kind of, okay, I need to do this, and then I need to do this, and then I need to do this. In order to get from here to here, these are the steps that I need to accomplish. If you never say it, if you never write it, then it's this kind of ethereal, fluffy thing out there. And there are no hard and fast things that you can put in place to accomplish this fluffy, opaque thing out there, which is why words are so important when we talk about what it is we want to accomplish. What are the things that we want to manifest for ourselves?
Um, One thing about this book, How Money Works for Women, it's very relatable. I mean, people from all ages can really understand this book. It's not where, oh, I can't understand this. It's very basic. It's very basic. and it reaches all age groups. And that's one thing that stands out about the How Money Works for Women book. And I'm glad you all did it that way, because sometimes you can read finance books and you be like, don't know what you just read. You know what I mean? Like, you need
Right.
somebody to explain to you everything that you just tried to understand, you know? So one thing, that's why I say this book is very, I try to hand it out to as many people as possible. That's one of my goals, especially for a lot of women, a lot of people that I do know. And like I said, just start to have a conversation about money, about finance, and educating people, you know, about financial literacy. That's
Yeah.
also one of my goals as well. So that's why I decided to have this Zoom today and have you on to discuss that. Um, a lot of times, if you ask people about are they financially literate, most people will say yes. I know how money works. I know how money, you know, I know how to manage money, you know, and but statistics clearly shows, as you stated in the book, that around the world, only 30% of women are considered financially literate. So that was definitely a shock, you know, because like I said, when you
Right.
ask people, you know, do you know about money? Yeah, I know about money. And we all think we know about money. But when you read this book, it's so much stuff in here and so much information that a lot of us didn't know.
Right. And
So
I
that's
would
why
want to
it's
say
so important.
it's not our fault. First of all, we weren't taught it in school. And second of all, the financial industry really doesn't speak to women. And they don't show up for women in the way women experience money. Taking care of our kids, taking care of our parents, you know, being 80, earning 82 cents for every dollar earned by a man. The financial industry does not show up for us in the way that we are here, we are present, what we are experiencing. And so it's not our fault that we don't understand, or that only 30% of women may, on a survey, um, you know, be considered financially literate. But it is our responsibility to get there. When the book is full of statistics, but there are some statistics that I think women should really understand. In 5 years, by 2030, women are expected to control $30 trillion of the wealth in this country. That's 2/3 of the financial assets in the US. So we're coming into our own, and we better get smarter in order to understand what to do with that wealth, because we are the caregivers, we are the educators, we are the stewards of future generations. I'm already, as a financial professional, seeing that great wealth transfer happen for women, because we're inheriting from our parents, our grandparents, our spouses, our siblings. And so we need to be better prepared for that. And so it is up to us. It's our responsibility to get, smarter about money, to become more informed about our own financial situation, and what are some of the things that we need to do. Um, I I mean, I just really appreciate where women are coming from, because it's like, Kim, I work two jobs. I take care of my family, and I clean up the house and cook dinner at night. I've got no time to really understand how money works, or to do the research to get better informed, which is why we wrote the book in a very accessible way. So we do it through stories. We tell stories about women I've dealt with through my business as a financial professional. Some of them are conglomerates of women. Some of them are real life women who got this situation that resonates with a lot of other women. So we tried to make it as interesting and down to earth and realistic as possible. So women can, if they've got an hour of free time, in our busy schedules, okay, here's a way you can spend that hour that will be interesting to you, and will help you become better informed.
I wanted to touch on the fact that due to the pandemic, some women went into a deep financial crisis because lots of women lost their jobs for various reasons. So that's like a setback, you
Right,
know? I mean, people literally was using their credit cards more, you know, whether it be for shopping, whether it be for trying to get groceries in the house, you know, when you lose your car, when you lose your job, could be for paying their rent, you know, for various things, paying bills. People started to use their credit cards a lot during the pandemic. So now you're deeper in debt, you know. So now we're trying to figure out how to get out of debt, you know, since it's been
right,
a couple of years since the pandemic. So it's almost like the ball is starting to roll again, where you're kind of like coming from ground zero and working your way up. Like I've saved all this money, but I've used it all in, you know, however many months you was out of work. You know, it could have been a year, 2 years, 3 years. I mean, I don't know, but I'm just saying now it's like everybody is having the financial in a financial deficit, you know, and we're trying to find a way how to get out and make money work for us some kind of way, you know, and to live a better life. So
right.
yeah, I'm glad that you, like I said, dedicated this book to women, because a lot of women, you know, are not married. You know, a lot of women are single. A lot of women are taking care of themselves and have children, like you stated. Even in your book, where it stated that some women have disability children, you know, they have children that's disabled, have all type of things going on with them, health issues, you know. So that makes life harder, because now you have an extra form of way of how to survive, you know, whereas most people, okay, I have to pay for my kids in school, but when you have a child that have health issues, that's already a lot of money, you know, it's extra as far as medications, going to the doctor, having people come in the house and take care of them, maybe while you're at work or wherever you may be. You know, it's just an
Right.
extra hardship on a lot of women, and people don't even think about that. You know, um, you also stated in your book, that was the one with the person that had the disability child was Val. She was 31, a social influencer. Um, who was another one? Dana, who was a hospital director. 2/3 of Americans rely on life insurance at work. You know, we use our college savings fund a lot for people that's going to college, you know, how to even save to go to college. You
Right.
know, it's just so many points that you touched on, and women of all age groups. I mean, you're talking from 19, getting ready to go to college, how to repay student loans, you know, starting from 19 all the way to what, 86, you
86.
know,
Right.
86, 87, you know, so that it was a wide range of different scenarios and different views of how women need to know more about financial literacy. So,
Exactly.
yeah. So I
So,
want, go ahead.
yeah, we go through the wide range, as you said, from 19 to 86. You know, Zoe's the first character at 19, and she's trying to figure out student loan debt and how to navigate that. To Maria in her 20s, who wants to start her own business, and she just got engaged. So she's planning a wedding and figuring out, okay, how do I share my money with a man? To Val, who's in her 30s, who has a special needs child. And all of the things that you just talked about that parents of special needs children go through, it is much more expensive. And so we talk about that. What are the government resources available? What are some of the extra things that special needs parents need to think about and put in place for their children? To Dana in her 40s. Dana, you know, is a hospital director. She's got 2 kids. She's trying to figure out employee benefits. What's the 401k? What's my life insurance? How can I, you know, set money aside for retirement and set money aside for my kids' college education at the same time? So we talk about that. What does that look like? What are employee benefits look like? What does that, all of those things mean? to Sarah in her 40s. Sarah is, I think Dana, I think maybe Dana and Sarah are both in their 40s. But Sarah, who left an abusive relationship with nothing but the clothes on her back and the kids in the car, and she was starting over. And how did she do that? How do you put your life back together when you've got kids and nothing but an automobile? How do you do that? And so we talk through that in Sarah's chapter. Next is May, who's in her 50s, who's taking care of her aging father and her adult son at the same time. How do you do that multi-generational family planning? And so we talk about that. That's May is probably the character that resonates with me the most. To Hope in her 60s, she's trying to figure out Social Security. When do I claim? But also in her 60s, surprise, surprise, she finds herself divorced. And so she does not know, is she going to be able to retire at all? So we talk through that. What does it look to go through a divorce? What are the things that you need to be mindful of? And also, kind of, when do you claim Social Security? When's the best time? The next character is Fatima, 73. Took care of the family, took care of the household, never participated in the family's financial decisions. And at 73, finds herself a widow. She has no idea how much money they have, what they owe, what bills to pay. Can she keep the house? All of that is going through Fatima's head. So we talk about that. To the last character, which is Jan, who's 86 in retirement, and she's looking to create a financial legacy for her grandchildren and great-grandchildren. And how does she do that? So we talk through all of those things. And through my life, I've lived several of those characters in my life. And when I talk to women who've read the book, they're like, oh, yeah, I was like 3 or 4 different characters. So we really hope that through sharing those character stories, that women can relate to them and find some really practical tips to help them.
Yeah, a lot of people, most people that are married, I wanted to focus on them because when you're married, a lot of times your husband handle all the finances, right? I mean, probably a good percentage. A lot of times you let the man handle the mortgage and everything else, because that's just what he chose to do or whatever, it's what you all agreed upon. But for Sarah, who's age 49 as a real estate agent, she was dealing with domestic violence. And the book stated that both parties should know what's going on financially, which is so true, because we as women, we just sit back. The man handles the finance. I mean, looks for the house, sign the paperwork, and when she left, it said women that start over due to a separation, a divorce, or death of a spouse, those are some really critical times in life. I mean, we know a lot of people who have been divorced. I mean, life is one way when you're married, but when you're divorced, you're like picking up the pieces again. Like literally, you don't even, because you've been married for so long, sometimes you don't even know where to start. You know what I mean? Like you're starting life all over. And some people don't even know how to pay bills. I believe one of the ladies said it in the book, didn't even know how to pay the bills. Something so simple that we think is simple, but when you don't do it and you have someone doing it for you, you you don't know. So it's so important, even like with a death of the spouse. I mean, that's something that just happens, during the pandemic. A lot of people lost their spouses, husbands, and literally had to do life by themselves now, and handle everything on their own. The expense of having a home or taking care of the children, everything has changed. You don't have as much income like you was having before. So your whole life has literally turned upside down. So I think that's so important because even if you're married for so long, 10 years, 15, one lady was divorced at 60. Like
Right.
she didn't even see it coming. I mean, sometimes you just don't even see it coming. It's like, oh my God, what happened? So now you're
Right.
at 60 trying to do everything by yourself. And so this book is so important, like I say, for all women, and I also want to dive deeper into the book and have you touch on some things about um the rule of 72. Can you just definitely, explain that to the people? Rule of
Okay.
72.
So the rule of 72 is one of those basic financial concepts that we, for the most part, aren't educated about. And it tells us how many years it takes for our money to double. So you take the number 72, and it's always 72, it's a constant. You divide it by the rate of return, and that tells you the number of years. So say you've got your money in a savings account. Say you're earning 1% a year. They typically pay less than that, but say you're earning 1%. 72 divided by 1 is 72. So it will take your money 72 years to double in that bank account. Say you're earning 6% a year. 72 divided by 6 is 12. Your money will double every 12 years. Say you're earning 8% a year. 72 divided by 8 is 9. Your money will double every 9 years. And so a lot of women, because we tend to be risk averse, we want everything to be safe, safe, safe. We keep our money in the bank account, which is earning less than 1% a year. So, you know, we need our money to double. We need to understand the rule of 72 and the other basic financial concepts like the time value of money and the value of compound interest to understand how money grows. How do you put money to work for you? Well, you understand those rules and you put money to work for you. If you put your money to work for you in a bank account that's earning less than 1%, it's not working very hard. Now, I recommend you put some money in there for your emergency fund or a cushion there for you for your bills, but take some of the money and look for opportunities to invest in vehicles that are going to provide you with a higher rate of return, whether that's a guaranteed investment or a non-guaranteed investment. I recommend you do your homework and you take a look at that because you want your money working as hard as it can for you so you can accomplish the things that you want to accomplish. Now, the rule of 72 can work for you or it can work against you. It works against you when you borrow money. So I think the going rate on a credit card is over 20%. And so if you divide 20 into 72, I think it comes out to about 3.9, 3 point something. So your bank's money is doubling every, say, 3.5 years, but your money in the bank account is doubling every 72 years. And so who's winning? Who's accomplishing their goals? Well, the bank certainly is making a big profit off that credit card that they gave you. But you might feel good about the safety of your money. But if you want your money to grow, to work hard for you, to accomplish things for you, then you've got to make some smarter, more informed decisions.
Yes. Anybody have any questions? Anybody? I wanted to talk about how important it is to have a financial professional to help you along the way because there's so much information out there that you may not know and you're trying to learn as you go. But if you have an expert or someone that can help you, a financial educator, someone to help you. They spoke about it in the book. One lady had, when she got divorced, she had an accountant, a mediator, that was a little less than having a lawyer, but she had a financial educator too, someone to help her figure out how much she can get from, spousal return, whatever she can get,
Right.
because sometimes you don't even know which way to turn when you're divorced, and this is like, okay, I don't know what I'm worth. I don't know what I can get. I don't know, and you just don't even fight. You just let it go, and just leave. You all go separate ways. But it's so important to have people that is knowledgeable in the area of whatever you're dealing with. It's so important because they can help you to get out of it, you know, and you may not even know where to even turn or to look. But like I say, start somewhere. Reading financial books is so important. And like I say, having a financial educator, which is what I do and Kim Scouller and our company, you know, you can just find someone even in your local area, but you should
Right.
always find someone that you trust. One lady said she didn't when her husband passed, she didn't go to that financial agent anymore. She said he didn't really even look at me when we were talking. When I was married to my husband, when we would come together, he would, you know, just shun me off, you know, not really engage me, you know, look at me and ask me questions while we were sitting together. So
Right.
a lot of women nowadays are a little more comfortable with talking to another woman about their finances. It's just a
Another
women's
woman
thing.
or someone who feel comfortable. I felt that because what she said was when she talked to him, even after the husband passed away, he still, when she said she didn't understand or whatever, she felt he was just not paying attention to what she was saying or not even trying to understand what she was saying about money or whatever. But my question is, because you answer a lot of because you mentioned about the banks and how would we go about finding high yield interest accounts, going through a professional or something like that? Because most banks, of course, they're making more money by keeping our money at a low interest, and then they're charging with their other things. They have credit cards linked to their accounts and charging high interest. But how do we go about, how can I say, getting those high interest compound accounts? And would that be through a professional?
So I recommend working with a financial professional.
Mm-hmm.
There, there's a misconception out there that you have to have a lot of money in order to work with a financial professional. And that's just not the case in many situations. And I prefer, you know, I go to a woman doctor and I prefer working with women because I know I can ask any question, even if I think it's going to be a stupid question. Um, and it won't be condescending. They won't be dismissive about it. They'll understand where I'm coming from. And so I really recommend working with a financial professional. And for women, I love working with other women financial professionals to help you. The other reason why a financial professional is so important, in addition to helping to guide you, is that a lot of people think, well, I can DIY it. I'll do it myself. But it's impossible for you to be objective about your own money. It is, and it's always good to have that objective person who's not having knee-jerk reactions to whatever the president's doing today, or if the Fed's raising interest rates or lowering interest rates. They've got this more objective viewpoint to help bring that perspective to the decision making. It's just, I'm emotional about my money. And so I work with a colleague of mine to make decisions about my own finances because I want that objective viewpoint to help me.
Anyone else have questions? I want Lisa, do you have a question? No? I wanted you to talk more about the 7 money milestones.
Oh,
That
I'm
was
sorry,
really,
Tanisha.
you have a question?
I did. I just
Okay,
can't
go
take
ahead.
myself off of mute on this phone, so I
Okay, go ahead.
apologize. Um, so similar to Yolanda's question, which I appreciate this whole conversation, and next steps, like where do you go to look for like a financial educator or professional, and do you have recommendations of like how do you know who you can trust? I think that's the other thing too. So even if it's a female, since I don't know much about finances, how do I know if the information I'm getting is correct?
Okay. So if you look in the book, and do you have
Hmm.
the book?
Yeah,
If
I have the
you
book.
look at Fatima's chapter, Fatima is the 73-year-old widow.
Mm-hmm.
She wanted to fire her husband's financial professional because he wasn't paying attention to her. We
Mm-hmm.
include in her chapter a list of interview questions for you to ask
Okay.
a financial professional you're considering. And we've got ideas in there on how to find one for you, but I highly recommend Tanisha,
Okay.
who is hosting this event. And, or you can ask Tanisha for a recommendation. So
Okay.
the majority of my clients I get by referrals.
Mm.
Women I've worked with, my clients, and oftentimes my clients are my real estate person, my hairdresser, my nail lady, my lash lady, my facialist. My clients are most of the women who I work with, spend time with, and care about, and they care about me, and I get so many referrals from them. And because we are great when we find somebody that is really good at what they do and we know is listening to us and cares about us, we will refer
Mm-hmm.
that person.
That's helpful. Thank you. And Tanisha, I'll be calling you. Thank you. That's
No
helpful.
problem. No problem. Um, Anybody else have questions? Shakina, Angela, Diane, anybody?
I just really want to say that I appreciate this, that I don't want to say simplicity, but the simplicity of the book, because it made it really easy to follow. And I like the part when you said the 2-minute rule for shopping, because sometimes I'm not I don't just shop just to shop some of the time, but there are times when I'm like, oh, do I really need this? So I'm not that person in the book that have a whole bunch of clothes with tags on it, but I do have more than what I need. Like I don't necessarily have to buy an outfit just because I'm going out of town. You know what I mean? But I tend to do that. So I
Right.
like the idea of just saying, do I really need this? Because that's what I find is most where I spend money where I really don't have to. And I
Yeah.
just really like how one of the characters, I don't even know if it was a character or if it was just a statement, and it was about them not being, I think they was like 46 or something, and the quote was, "Is not, you're not too old to save," or something like that. And I was like, that's so true, because even at 50, when at work, when people come around to talk to us about saving outside of our 401b at our job, it's always like, well, I'm kind of behind the mark now if I haven't started saving. Like now I have to like double it, but there at least something is better than nothing, and I like that part of the book. So just thank you for the
Exactly.
simplicity of it.
I love that 2-minute rule that Sharon put in there. And I love, we really wanted to put practical things in there, and we wanted every woman to feel like she could do this. No matter what age you are, no matter how much you have to put aside, we want you to feel that you can do this. As long as you start it and you keep doing it consistently, you can do this. Even if it's a small amount, whatever it is, and it's never too late.
Yes. I also like the book because it teaches you to think about the future. We're always thinking about right now, right now, right now. I got to pay these bills right now. I don't have no money right now. You know what I'm saying? So it teaches you how to it takes a while for it to actually put in place to be financially stable. It doesn't happen overnight. It's years of saving, years of seeing your money grow. You know, like Sharon stated, having assets. That's one of the main things you have to have is assets. But like I stated, but regarding planning for retirement, when you're 30, you're not thinking about retirement. When you're 20, you're not thinking about retirement. I mean, let's just be honest, the most majority of people, we're not thinking about that. We're trying to think about where we're going to the club, hanging with our friends, right now. So that's one thing that I say this book really helped me to focus more on is planning for the future. Asking questions at your HR department about the retirement, the whatever they have to offer, the 401k, just different things. Making sure you have life insurance. That's one of the main things. You know, people don't know that having life insurance sometimes is one of the most beneficial things that you can have. You know, death is always, of course, unexpected. You know, so you want to prepare in advance to make sure everything is good. Having wills, making sure you know what you want to leave your family, even if you're not rich, because we're all not rich here. But just to know who can get what you want to give to your daughter, your son, your grandkids, so it won't be your problem. We don't have no trouble. You know what I mean? So it's always good to just have your stuff set in place and review it every year to make changes. You know, it talks about that in the book, you know, just trying to prepare, you
Yeah,
know, and not think about today, but think about.
yeah, and I have a question about that because because she was taking care of her dad, she put long-term care insurance in place. So I thought that was pretty interesting. And then she was trying to kill like two money milestones with one stone by putting that in place. So when she retired, she wouldn't have to drain her retirement fund, but she can use that long-term care insurance as supplement for retirement income. So are you able to expound on that, Kim, how that kind of works? Because that was interesting.
Absolutely. Long-term care is one of those things I talk to a lot of people about. You know, when you look at the statistic that 80% of women die single while 80% of men die married, who's going to take care of us? We've got to take care of ourselves. You know, we don't want our children to have to change their lives in order to take care of us, like we may have changed our lives to take care of our parents. And long-term care insurance is a great way to do that. Now, insurance policies from our grandparents and even our parents' age have come a long way. And so in permanent insurance policies now, many of them, and they're called indexed universal life, or even whole life, in addition to providing life insurance, will also provide two other things: a cash value that you can use to supplement your retirement or for other financial goals. Also, many of them today offer a rider, RIDER, a rider to cover a long-term care expense. So for me, this is the kind of coverage that I have. I have $1 million policy, permanent life insurance policy on myself that is growing a cash value. I think it's got about $100,000 in cash value right now. The long-term care benefit is calculated this way: 2% of face amount. 2% of $1 million is $20,000. So if I have a long-term care need, this policy will pay me $20,000 a month to cover my long-term care need, up to the $1 million. So it's not that I could use the long-term care and get $1 million death benefit. To the extent I use the long-term care, it reduces my death benefit, which is why I got a really big death benefit, because I will probably need that long-term care piece, but I want to leave some for my son after I pass away. And I want to be able to use the money that's in the cash value, either for retirement or, you know, my son right now is saving to buy a house. I want to use some of that money to help him, you know, get a down payment on a house for him and his wife. And so that's partly why I'm saving my cash value for. So, you know, talk to Tanisha. She'll either help you or she'll recommend somebody who will help you understand what that policy might look like for you. They come in all different sizes. I just happen to get $1 million policy. I sell $100,000 policies for clients. So it's, you know, whatever fits your situation, but I highly recommend it for just the long-term care piece.
Awesome. Thank you.
Yolanda, did you have a question? I saw you took your mic off earlier.
I do have a question. So my question is also in this book, it mentions about the 401k plan. And sometimes we do invest, but sometimes we don't invest to the full potential of the employers matching it. When we also don't read our 401k plan, because I was talking to a friend and he was like, well, you can invest in the stocks that you want. I'm like, I don't know if I can do that. But sure enough, I read the 401k that they sent to me, and it says that you can diversify your portfolio as you want, which I didn't even know that, because it's like the information comes to me and I didn't pay any attention to it. And I was like, oh, I didn't know that. So basically to diversify your portfolio so you can have money coming from different avenues so you won't lose in case of, oh, this crash, but you were supposed to pick from different areas, with the financial market, the health market, so you can get funds coming in regardless of, as you say, whatever the president is talking about, who cares? Your money is still working for you.
That's exactly right. You want your money to work for you.
I also wanted to add, when you were talking about the long-term care, a lot of us already have life insurance. A lot of people have life insurance, but like you stated, people don't even know about long-term care. You're not thinking about that. You're not thinking that I'll get sick and somebody has to take care of me, which once again is thinking about the future, and you're thinking, how am I going to pay for that? And like Diane also said, that the lady did use her retirement fund, because when you get older, you're going to retire. So you're already living on a little bit of money, not as much as you would if you were working. And now you have to go to a nursing home or a rehabilitation center or anything of that sort. And who's going to pay for it? So that's why it's so important. And I don't think people do know about the long-term care. It is very important, because if you have life insurance, it's just going to pay for when you pass away. I mean, you can take a little bit out, like the cash value, like she stated, but life insurance is not going to pay for long-term care. I mean, it's just not. It's something extra to have, and a benefit to have towards your when you age.
So
important.
And if you've got
and also, oh, go ahead.
I was just going to say, if you've got life insurance in place, take a look at it, or send it to Tanisha to take a look at and see whether it's got any long-term care coverage, or whether there's an opportunity to add long-term care coverage, or maybe this is a good time to move your policy to a different company that will provide you with that long-term care option.
Yes, because in the book you stated the price of long-term care, it's thousands of dollars. I mean, we go to visit people in nursing homes and we don't realize how much they're paying, but they have to pay for this money on a daily basis to even stay there, to have the people working for them. So it's not just a couple of dollars, it's thousands of dollars, thousands, 2,000, 3,000, and it goes up. And in the cost of inflation, it's going to go even higher in the 5 or 10 years from now. So we have to think about that as well. It costs to have people take care of us. That's why a lot of people do take care of their family members in their homes, but now you're taking away from their lives. You know what I mean? Or they're not getting the proper protection or the health care that they need, because you're doing the best you can. So now you're sleepy, you're tired, you're worn out. I have seen where people have taken care of their family members and they passed away while taking care of them. So let's be clear.
Right.
So yeah, I want to talk about that. Also, they mentioned the $1 Million Baby Program on page 145. Can you talk about that, please?
So, I don't know if Social Security will be there for my son, he's 28, or for his children. I know it's going to be there for me, but I just don't know whether the next generations are going to have Social Security, or what kind of form it's going to be in. So they, more than any generation, they are going to be responsible for their retirement. So we, as parents or grandparents, can put a small amount of money aside for them now, and let compound interest and the rule of 72 and the time value of money work in their favor to create a source that is at a minimum $1 million for that child or grandchild when they're ready to retire in their 60s. We work with product providers products and services that can help you accomplish that for the next generation, or your grandchildren, for their future. I do a lot with grandparents, since I'm hopefully going to be a grandparent soon. And all my friends are grandparents. I hit them up. I'm like, do you know if, little Milos is, going to have money for retirement when he's 40 years old now, when he's 60 years old? And if you put aside, $15,000, $20,000 now, one time, that money can grow over the next 50 years and create that pool of funds for your grandchild. Grandparents, things, if they can do that, a one-time, one and done lump sum of money to ensure the future of their grandchildren, it's worth it to think about that. It's worth it to do something.
Yes. Anybody else have any questions? I also want to encourage everyone to start reviewing your insurance policies. Start reviewing that. If not, you can ask me to set up a meeting with you, and we can do a lot of stuff is done via Zoom now. We don't have to see people face to face anymore. Thanks, thanks to Zoom. But yeah, so I would suggest, because a lot of people have had their policies, they may say, oh, I've had it for 20 years now. Sometimes your term might be up, especially if you have a term policy. So now, if you got a 30-year policy and, hey, you don't know how much time you got, so then something happens and then you don't have anything because you done forgot, or maybe something happened where you just, wasn't able to keep up with the timing of it. And I've had people where their children get a certain age. Your children can't stay on the policy with you forever. They're going to grow up and become adults and have their own policies. So that's important as well. So I like I said, I really suggest and encourage everyone to review your policy, see what you have, try to make some changes, maybe add more. Just do whatever you need to do to make sure that you're going to be okay and financially in a good space, as we get older, because it's very important. Do anyone want to have anything to share, any stories, any questions, anything while we have Kim on? Okay. All right. So that will be the end of our discussion today. Thank you, Kim, for taking time out of your busy schedule, because I know your schedule is so busy. I know you're a busy woman, especially since this book just came out. It's only been out, what, a week ago? I mean, no, a year. I'm sorry, not a week, a year. It's been out, I believe, last July, right?
A year. Right,
yes.
A little over a year, yeah.
Yes. So again, the name of the book is called How Money Works for Women. How Money Works for Women. Take control or lose it. So please go out and get it. If you need a copy, let me know. I can get that for you. Like I said, we have 3 other books. Change Your Literacy, Change Your Life, How Money Works, and the one for Next Generation. So again, please, everyone, take control of your finances. Find a financial professional, call me if needed, to help you assist in your financial planning. Again, review your policies. Try to focus on how you're going to be okay for the future and your family, okay? All right, then, that'll be all for today. Again, thank you, Kim, and you all have a great week.
Thank you.
Thank you.
Bye-bye.
Bye.
Bye.